Alrighty guys, welcome back to the channel. This is Ethan with Disciplined Trading. I hope everybody has been having a great weekend. I know I have. Today, guys, I really just wanted to go over a couple charts, a couple currency pairs that I've been looking at. We're going to be going over Euro USD and why I marked up the zones that I marked. And we're going to be going over NZD JPY, and then we're also going to be going over CAD JPY. This is something I have yet to do on this channel, but I really just wanted to kind of go over the setups that I'm looking for. So maybe you guys could look at the same thing. And I really just like I stated in previous videos, I'm really doing this so that I can kind of track my journey and where I'm at. And if it's able to help you guys out, that is that's the goal, right? So. Cool. So yeah, I say let's go ahead and hop right into it. I really am not trying to waste any time here today. I know I've I've been saying as well. I am trying to make the videos a little bit shorter, but it is hard just because I am the type of person to tend to go into detail. But I'm gonna try to make this one pretty clear, pretty concise, and really just give you guys a couple ideas. What to look for in this upcoming week starting today, Sunday, right? So yeah, so let's go ahead and jump right into it, guys. So the first one I'm actually looking at is going to be Euro USD, right? And I'm going to break this down exactly, how I saw it, why I marked it up the way I marked it up, and yeah, right? So what we can see here, guys, let me actually go ahead and drop to the, we're going to go ahead and go up to the daily, just so I can kind of explain, my thought process when defining a directional bias, which is it's just my first step, to my strategy and kind of what I do. So basically, what I'm looking for is, like I said, I wanted to look for a directional bias, which means, if the market is going up, I'm only going to be looking for buys. If the market is going down, I'm only going to be looking for sells, right? And there's obviously, different confirmations that I use, but that's really the gist of it. If we can see a clear direction, a clear trend, then I have my bias set. We can drop down to the lower time frames, right? So if we go ahead and look at the daily right here, we can see that EU has clearly been in a solid, very healthy uptrend as of recent, right? One thing, I mean, you can you can see with the naked eye, right? We have been in an uptrend. But one thing that I found super cool as well, which not a lot of I don't know, not a lot of people look at, or it might seem insignificant to some people, and they might see these wicks right here, just kind of rejecting. But one thing that I saw was that price actually went ahead and moved higher, out of this huge wick that was created on this daily, right? So that kind of confirms that we do want to go ahead and move higher, in confluence with the fact that with the naked eye we can see that we're clearly in an uptrend, right? So I know these past few months have been pretty bearish for EU, but now it looks like we've been forming a bullish, just a bullish trend, and I'm really hoping that continues, and I don't see any reason why it wouldn't, right? So that's just kind of the first step for me, just identifying a directional bias, right? So let's go ahead and drop down to the 4 hour. And again, guys, I'm going to try to make this like pretty quick on every one of these pairs, because if I go in depth with every single one of them, it's going to be like like 45-minute, hour-long video, and that's really not what I'm trying to accomplish. I just want to show you guys, what I'm looking at, right? So if we go ahead and drop down to the 4 hour, now that we know that our directional bias is going to be bullish, again, the only thing we're going to be looking for is buys, right? So from here, what I do, and this is shout out to ICT, Inner Circle Trader on YouTube, or anywhere. I mean, he is just the founder of this, I guess, style of trading. It is institutional Forex trading, but he is really the one that sparked looking into these so-called institutional levels, and trading like this. So I don't want you guys to think that I'm taking any type of full credit for this shit. It's not me. I've definitely learned, but I just want to say props to him. And if you guys do want something a lot more in depth, I would suggest heading over there, right? So, but yeah, so let's go ahead and get into it. So after we found a directional bias, what I'm going to be looking for is a valid point of interest, right? So what makes a point of interest or a zone valid for me, right? So what I'm looking for, guys, is I actually went ahead and I'm actually going to delete this line up here just because I mean it's not it's not useful on this 4 hour and I don't want to confuse you guys. But what I saw when I was marking up these charts today is I actually saw that obviously we are in a bullish trend, right? So we're looking for buys, and I saw that previously, I mean this was quite a bit ago just because this is the 4 hour chart, but we can see this last down candle right here. Let me actually go ahead and zoom into it because I know sometimes in my videos it is a little bit harder to see. But what I was identifying as a level is this last bearish candle, which is black on my charts, before that huge spike in volume and then break of structure to the upside, right? And we can see, I mean, obviously, like look at this volume. It's incredible. It's a lot of volume. That's what we're looking for. And then we also see a break of this high right here, right? Which validates this point of interest for me. Okay. So I hope that makes sense as to why I marked up that level. But really what I'm going off of is just marking a point of interest or an order block by the volume of the candle following, and then I need to see it break out of a structure as well, right? And I do just want to mention we are only so in this case we're looking at the black candle, which is basically bearish candles on my screen. We're looking at the last bearish candle before that huge spike in volume and break of structure because we're looking for buys. So it's going to be the last down candle before the up move. So I really hope that's not too confusing. But yeah, so I basically have this level marked up right now, guys. And what I'm looking for is I'm looking for price to come in to this level right here, which I actually have an alert set for it too. But I'm actually basically just waiting for it to come into this blue level, which is the whole order block or point of interest. And then as soon as it comes in, I have certain criteria that I look for, which I'm gonna go ahead and go over in this next chart that we're jumping into. Okay, so again, I hope that made sense. I know this might seem foreign to to some of you guys, but if you have been following this style of trading, institutional forex trading for a little bit, you're gonna know exactly kind of what I'm saying, right? So, yeah, so that's what I'm looking for on Euro USD. Basically, just waiting for it to come into this 20820 level, and then we're gonna be looking for a break of structure on lower time frames, which I'm gonna go ahead and get into in just a second. So yeah, so with that said, let's go ahead and jump into NZD JPY. And guys, this is like you're gonna notice I do the same thing, and I think consistency is key in trading. You don't want to always be switching up, your strategy or what you do, because you just can't find consistency in that. It just doesn't make sense to switch it up if you have a strategy that works, which I mean, it's been working for me, so I don't want to switch it up. But yeah, you guys are gonna notice I really do the same exact shit. So what we can see, like we saw on EU, is we can see that I marked up this point of interest on the 4 hour right here. And why did I mark this up? Guys, it was the last down candle, last bearish candle before that huge spike in volume, which continued. I mean, look at that volume. I mean, fuck, it's a big candle. So we saw the spike in volume after this last bearish candle. We saw that spike in volume, and then we also saw this break of structure, the break of structure of these previous highs to continue higher. So we can now validate this level as a valid point of interest, right? And you guys have to keep in mind, and again, ICT, the creator of this, this style of trading, really goes into it more in depth, but you got to think about how these huge institutions and banks are trading. They don't want to buy price, or they don't want to buy into this market when it's super close to the high of where price has been at, right? So it would make no sense for the banks to jump in like somewhere around here. It's so close to where price was previously at. What banks and I mean just firms and just different institutions like that are looking for? They're looking to get a discounted price. Right? When you're buying something, you don't want to buy high and then try to sell higher. That doesn't make sense, right? You want to try to buy at a discounted price, which is kind of the whole concept behind this, right? So again, guys, I know I have a feeling this is going to be a longer video. I apologize, but this is going to be the last bearish candle. This is going to be the last bearish candle before that huge spike in volume and then break of structure. And I know a couple of you guys might be saying, hey, why didn't you go ahead and mark this level? Well, funny enough, I did mark this level, and this was the video I had previously uploaded about a week ago, and I actually did go ahead and take a trade from this order block because it did meet my criteria, had that huge spike of volume and break of structure. I went ahead and took the trade, and I was profitable on it. I think I honestly, I want to say like I exited somewhere like in the middle of this big candle, so I made a decent amount of profit, but yeah, I mean, so it definitely was a valid level. Although I'm looking at this current price action, and I mean, this is live right now. This is where the market stopped on Friday. So I mean, it pushed below this level, and now the next valid point of interest is going to be this level because it meets our criteria of spike in volume and then break of structure. So again, I know I might be speaking foreign to you guys, but I'm definitely going to go over it in future videos. But that's why I marked this level, right? So basically, where'd this line come from? Basically, what I'm looking for, guys, when it comes into this point of interest, which it did, and let me actually go ahead and just drop down to the 5 minute, which is usually what I do. I'm just going to show you guys exactly what I do. When it does eventually come into a point of interest. I was not able to take this trade. If this was on any other day, I have no hesitation that this would be profitable. This is exactly what I look for, but I personally do not take trades on Friday. It's fucked me because of spreads closing, then spreads opening. I just don't do it. But if this was on any other day of the week, I would have been in this trade right now. So on this lower time frame, what we're looking for again, guys, is for price to come into this blue level, right? And it's a lot bigger because we're on the 5 minute instead of the 4 hour. So it's a little more zoomed in. But I was basically just waiting for price to tap us into this level, and then what I was looking for was for price to show me a sign of bullish power. Right? So what I mean by that is I want to see as soon as price breaks into this 4 hour point of interest, I want it to break out of any previous highs that were created on this 5 minute. Right, and that shows me that hey, we're breaking out of the trend of lower highs and lower lows, right? That's been created. I want to see a break of that structure that basically just shows me that price does want to go ahead and move higher, and it also shows me that this point of interest is a valid point of interest, right? So basically, guys, it taps us in, right? And then what I was looking for, and I was literally looking at this on Friday, and I was literally just cringing because I could not take the trade. It would be going against my rules. I don't want to do that. But I was just looking for a break of this 5 minute structure, and then as soon as it broke this structure, I basically wait for price to exhaust on this 5 minute. And exhaust basically just means, I wait for it to stop moving higher and then kind of just maybe consolidate a little bit or obviously create a high. And then what I do is I go ahead and draw a Fibonacci tool, right? Draw a Fibonacci tool from the bottom to the top of this move. And my criteria for entry is I actually go ahead and set a limit order for halfway in between the 38.2 level and the 5 level. So as we can see, I mean, if this was any other day, or if this was in the live market, I would be in a little bit of drawdown right now. Let's just draw, a hypothetical position. And then I would go ahead and set my stop. I would go ahead and set my stop at this 78.6, which, guys, it's a tight stop loss, but I know why I'm getting into the trade, and I'm confident in it. And you know what? Worst comes to worst, it hits our stop loss, the bottom of this red box. and we get stopped out and I only lose 1% of my account. So it's not the worst thing. Shit could always be worse. But that's kind of a hypothetical position that I'm looking to take. This Sunday. This is really interesting just because I should be in a position on it. So when the market opens, I am going to have a very, very close eye on NZDJPY. Right. So cool. So let's go ahead and hop into the last pair that I am looking at. It's going to be CAD CAD JPY. Let's just go ahead and drop to the 4-hour. And guys, this is, I'm telling you, I do the same shit. I'm going to make this very quick because I've went in depth with the last two pairs that we went over. So real quick, guys. So so we have the 4-hour. I was honestly just using the 4-hour for a directional bias. We can see that so I use the 4-hour and the daily. Usually use the daily for directional bias. I did not go ahead and set my point of interest, as you can see on this 4-hour. I actually set it on the 1-hour, and I'll explain why in just a second, right? So if we go ahead and drop down to the 4-hour, or excuse me, the 1-hour from the 4-hour, I actually went ahead and marked this level right here. This is a very clean order block, very clean point of interest before all of this, like look at this, look, I mean, that's what, 1, 2, 3, 4, 5, 6, 7, 8, 8 hours of continuous just bullishness. Like, look at all that volume and all that power. Like, that just signifies to me that this is a very strong level, right? So I went ahead and I marked this on the 1-hour. And again, guys, this order block point of interest, the reason I marked it, it's the last last bearish candle before that huge spike in volume and break of structure, right? So basically all I'm looking for, guys, is for price to come into this level, and then we're waiting for it to hit our criteria on that 5-minute. And I just went over that on NZDJPY, but I'll go over it here again in a second. And yeah, so let me go ahead and drop down the 5-minute. Before I do, just real quick, this is something that I really am going to go over in a later video. So we can see that price has created a pretty solid level of support right here, and most retail traders, most traders in general would look at this as a level for buys, right? Me personally, what I see is the fact that all the market is doing right here is creating a pool of liquidity below this level, right? So basically what I'm saying is we know that, if you're a retail trader and you buy right here, or buy right here, or right here, or here, or here, you're basically going to have a stop loss set below, a little bit below this level, maybe even all the way down here. So I know that, huge institutions and banks are going to be looking to take this level out, basically collect all the stop losses sitting below here, and then we're going to go ahead and move higher, right? So again, that I know that was just just kind of random to throw in there, but I don't want you guys to be like, oh, well, like, why the hell is there a level right here and then money signs right here? It's basically the fact that there's just basically a huge pool of serious liquidity sitting right here, and with my strategy, ICT strategy, we can go ahead and confirm that this is basically just a pool of liquidity. Banks need to grab that before they go ahead and move higher, right? So yeah, guys, I'm gonna go ahead and wrap it up here, just with this last 5-minute, what I'm looking for on the 5-minute, excuse me, I'm having a hard time getting that out. What I'm looking for in the 5-minute here, guys, is the same exact thing I'm looking at on NZDJPY. I'm basically just waiting for, Jesus, why can I not find it? Okay, so I'm basically just waiting for price to go ahead and break out of this structure, right? And then maybe consolidate a little bit, exhaust, create a high, and then I'm looking for it to come into my Fibonacci level, right? So basically I just want to see a break of structure of this level. I want to see exhaustion on the 5-minute, and then as soon as I see exhaustion, we're going to go ahead and draw a Fibonacci from the bottom to the top, the hypothetical top, wherever it exhausts, and then I'm going to be looking for price to come into halfway between this 38.2 and this 50% level, right? And then I'm going to be looking to take a buy, and we're going to go ahead and ride it up. So, cool. Well, guys, I know I'm not even freaking sure how long this video is. I'm sure it is a long one. I always say I'm gonna try to shorten it, and it never happens. I just get so into this shit. I just don't want to. I don't know. I just don't want to like have it half make sense. I'd rather go into depth and have it a little bit longer. So honestly, guys, if you don't mind, just go ahead and leave a comment. In the comment section below, just let me know if you guys prefer a little bit longer of a video so I can go a little bit more in depth, or if you would prefer maybe a couple 10-minute videos a week instead of like a 1 30-minute video a week. Right. So, again, guys, thank you so much for stopping by the channel. I really, really, really appreciate it more than you know. Like I said in the beginning, this really this channel, these videos are mainly, I could care less about the YouTube numbers. It's really just it helps me out in my trading journey. It just helps me, right? It's and if I can help anybody along the way, that's cool as well. Right. So again, thank you guys so much for stopping by the video. I appreciate every single one of my viewers and subscribers. And I hope you guys have a great rest of your trading week. And I hope that this analysis was able to help you guys out as well as much as it's going to help me, because, again, I'm confident in these plays. And yeah, cool. So you guys have a great rest of your trading week, and I will see you guys soon. Bye-bye.